at the Citi India headquarters this morning. Lata has Surendra Goyal of Citi with her. Lata, over to you.
Yes, thank you very much, Sonia. Surendra Goyal is with me. Just my two-bit on the currency. We must remember that the rupee had touched 68.80 on August 27, 2013. I mean, this is 3 years on, that much more of inflation. 68.80 is not a weakening of the currency in comparison with any other currency. As Samiran told us just about half an hour back, the Indian rupee is still outperforming most of the currencies in the 36 basket of currencies which trade with India, which are big traders with India. And therefore, to be competitive, it is good for the Indian economy, good for several Indian stocks if it weakens. Yes, it would be a negative for FIIs who are, or at least hedge fund players, who on the margin will be losing. So that question first to our guest, Surendra Goyal of Citibank India Securities is with us. Surendra, first that question. We may see weakness in the currency. Would that be very negative for FIIs?
Yes, Lata. So I think you have to look at multiple things here. As you just said that there are number of industries which will benefit from it. But yeah, from a return perspective, obviously FIIs do care about the currency. And so when we were marketing, say, in the early to mid part of this year, with a lot of FIIs, when they have a framework where they assess the relative attractiveness of markets, stability of currency is a very important parameter as well. There are like 6 or 7 parameters, and this is one of them. And to that extent, it will worry them. But I think the second point here is, which you mentioned earlier again, I think you will have to look at it in context of other emerging markets. I think looking at it in isolation may not really help, because it's a global phenomenon. What we are seeing is happening across emerging markets. And I think we'll have to keep the relative picture in mind.
Okay. Well, before that, we have a big domestic issue to tackle. And I do want to ask you about demonetization. Have you started lowering your earnings growth for FY17 itself? And which sectors have you lowered it most?
Okay. So Lata, again, a few things here, right? First of all, there are a lot of moving parts. Absolutely. It's very difficult for analysts to really say that the short-term impact, next, say, 3 to 6 months or 9 months, is going to be so much demand impact. While the medium term, again, is a challenge, because this is unprecedented. We have never really seen anything of this scale. Right. And to that extent, I think analysts will struggle a bit in terms of kind of putting numbers and saying that this is going to be the impact for this year and this is going to be the impact for next year. Now, in certain cases, we have had analysts who have kind of taken a view on certain stocks that, yes, there will be a 10% impact. But even that is more some kind of a guess at this point, looking at obviously multiple factors. It's not easy to really give an explicit number that, okay, there will be a 10% or 15% or 20% impact. In terms of sectors where we think, so firstly, from a near-term perspective, I think there will be an impact on most sectors. Okay. Okay. So either there is a direct impact or an indirect impact, because like today somebody was asking me about a media company. Now, obviously, if their clients in the consumer space are impacted, they will see an indirect impact. So the direct impact may not be as high. So similarly, for all other sectors, there will be some kind of a impact. Somebody was asking me on the IT sector, or more on the BPO sector, that so many people have been standing in queues. Does it impact in productivity and utilization, etc.? Now, this is one sector where everybody thinks that there is no impact. So the point I'm trying to make here is, I think every sector, there is some kind of an indirect impact. Where we think that the impact could last a little longer is cement, for example. Okay. Now, real estate and anything actually real estate and related will see some kind of an impact. Consumer discretionary, I think it could last a bit longer. And then again, rural-focused NBFCs, etc. I think these are 3-4 pockets of the market where things could last a bit longer. What we have done from our perspective is, when we put out a note earlier this week, we have lowered our target multiple for the market. Okay, because I think analysts will struggle with earnings. So what we have done is we have taken down the multiple from 17 times to 15 times, which in some ways factors in the kind of earnings impact which could possibly come through.
All right, Surya, that's interesting, but I must hand it over to our equities expert. Anuj.
Morning. I was listening to your conversation with Lata. What's interesting is that you cut down your earnings multiple, but your Sensex target still remains the same. What explains that? And is there downside risk to that?
Yeah, hi. Good morning. So what we have done here is, so our earlier target, which we had set very early in this financial year, that was for March. And this target that we have set is for September. So that roll forward is essentially what kind of mitigates the impact of the target multiple cut. In terms of risks, I think, yes, I started by saying that there are a lot of moving parts. And we really need to see how things play out over the next 6 months. So to that extent, yes, there are a lot of moving parts, both globally and in India, and which is where I think analysts are finding it very difficult to forecast or change earnings.
Okay. Surendra, hi, good morning. You were speaking about the impact that the rupee would have, but does the depreciating rupee provide a fresh opportunity to invest into either the IT or the pharma names, or would you be concerned about some of the comments that are coming in from Donald Trump regarding, clamp down of H-1B visas, etc., in the IT sector?
Yeah, hi. So firstly, on the IT sector, so we have been cautious or negative on this space for over 2 years now. I think we have put out multiple reports where we have highlighted that this sector, if you look at the last 10 years or so, demand or revenue growth has been the primary driver. Currency is a variable in the short term, and particularly from a relative to market standpoint. But the bigger issue has always been demand, and which is where we are seeing multiple challenges, and we have written a lot of reports on them. There is a significant amount of pressure on traditional services which Indian IT businesses used to, are still doing. That's bulk of the business. There is a lot of pricing pressure. There is an impact of cloud and software as a service on certain parts of the business, and that business is slowing down. And investments are required in digital. So what it all does is your growth rates are coming off. You saw NASSCOM revising the growth rate down very recently. So, and at the same time, there is a challenge from a profitability standpoint. There are some large companies who will possibly have flattish operating profits this year. So I think the sector has fundamental challenges, and Trump, what he does, I think that's unknown. If you have anything which impacts the visa situation, either from a cost perspective or availability perspective, that could compound these challenges even further. So that is a sector which we remain concerned on. While we admit that, yeah, in the near term, rupee does provide support, and I think some people will definitely look at that sector as a safety, a safe place to hide kind of a sector. But having said that, I think one should not take their eyes away from the fundamental challenges that the sector is facing. And that's the reason it's still a significant underweight in our India model portfolio. Okay. Your second question on pharma, so that's a sector where we turned overweight a few months back, okay, and we still have an overweight. We think that earnings growth there should be relatively better, definitely versus IT. Okay, and I think there was a fear that if the election results in the US were different, then things could have gotten more difficult for the pharma companies. So if you kind of put it all together, earnings growth in that sector is decent. The sector has underperformed. Valuations are much more reasonable than we have seen in a long time. So pharma is a sector which we are significantly overweight on.
Well, for the moment, you will have to say that the market has found its feet. Our technical expert Ashwini was saying that he would go long, so long as 7950 is not breached. And at the moment, the market appeared to have turned from 7975 thereabouts. So it just found its feet for the moment, but it's going to be a crazily volatile day, especially after 2:30. It's a quadruple witching day. Let's remember that. Surendra, for the moment, the market is actually playing the global theme. What's up are the IT and the, well, pharma only, Dr. Reddy's, I guess, is some short covering. But IT is being taken positively too because of rupee going towards 69. And energy and materials, Hindalco has been a one-way street. So let me get to the non-IT, non-pharma space. How would you play banks? I mean, this whole demonetization has to play through the banks. So is it banks in general, financials that you will buy? Is there a pecking order in terms of NBFC, private, public?
Yeah. So, Lata, I think from a bank's perspective, there are, again, a lot of things to look at, right? While obviously the kind of deposits that we have seen are huge. Yeah. But at the same time, you will have challenges in certain segments, which in turn will impact the business of banks. So looking through all of that, see, our stance, if you look at for a while, has been that we have our big overweight on the private sector, retail-focused banks. Right, while there have been points of time where the state-owned banks have outperformed, but our view still remains that I think we want to stick with where earnings visibility is the highest. Okay, and to that extent, our big overweight still is on the private sector bank side.
Okay, what about the NBFCs? I mean, they were the screaming performers of 2016, dislocated for the moment by demonetization. How are you playing? Everything from Bajaj Finance to the Capital Firsts to down to the Manapurams, the MFIs, the what is that, Bharat Financials. How do you handle that space?
Yeah, Lata, so interestingly, a lot of the names you mentioned, we really don't have under coverage. Okay, so I started by saying that as a sector, a few sectors where there could be a medium-term impact, rural-focused NBFCs is one of them. But I really can't go into specifics because we don't have coverage on a lot of the stocks.
Okay. What about consumption itself? Will that be an underweight? Again, the Asian paints of the world were the screaming buys of 2016. Yeah. How do you approach consumer? And all parts, I mean, FMCG to durables.
Yeah. So, again, I started by saying that discretionary, the space in general will see possibly a more medium-term impact of what is going on. From a model portfolio perspective, consumer staples, again, we have been negative for a while. It's been one of the big underweights for us for a while now, okay? And even on the discretionary side, what we have done in a recent note is, so autos, which is consumer discretionary in some manner, so there we have kind of brought down the weightage. Okay, so consumer, both staples and durables, we remain underweight. And autos also, we have brought down the weight in the most recent update. So yeah, to answer your question, yes, we have a cautious view on consumer in general.
Anuj?
Surendra, you know, what's the view of FII investors? Because truth be told, the FII selling actually started in second half of October. We could look at the demonetization day and say that that may have aggravated selling, but it started before that, and the Trump win and dollar strength has only added to that. Do you get a sense that at some point the selling will abate and the FII money will come back, or will we have to deal with large FII selling for some time?
So it's always very difficult to call to take from a short-term perspective on what FIIs are going to do. My sense is that, see, if you the time frame that you were talking about, I think while we are all very focused on demonetization, obviously what's happening in the US is playing a big role. So since Trump or since demonetization, if you look at India is down maybe 10 or so %, but even EMs are down 8%. So I think while in India we are kind of trying to relate everything to demonetization, definitely there are bigger global variables at play here, which are impacting emerging markets in general. So on the global strategy side, for example, even we moved from overweight emerging markets, or we downgraded emerging markets. So we have changed our view because of what's happening in the US. So I think there are multiple factors which are a near-term challenge. Having said that, what I'll definitely add is India is a market which FIs have generally liked. Okay, and there are again multiple longer-term or medium-term reasons to it. There are a lot of good companies in India, which people would want to own again at a different valuation level maybe. But there are a lot of companies which are considered very good on governance, on business parameters, ROEs, etc., etc. And to that extent, I think it will remain an interesting market, but I don't think one can really rule out some near-term volatility.
Okay, well, for now, the bank nifty is underperforming quite a bit, inching towards almost 1% cut, 0.7% gone, and plenty of mid-cap stocks under quite a bit of pressure. Surendra, so, how would you really categorize the market trend here on for the next 6 to 12 months? Do you get a sense that we could be heading into a protracted bear market, and we could perhaps see a longer time correction, even if the price correction gets over?
So I think a lot will depend on the data that we see. I think companies will report in January, February. And I think people will be very keenly watching what is the impact on demand has been and what management's comment from a future outlook perspective. So I think to that extent, the next 2 quarters are very important. I think if people get a sense that at least the initial impact on a lot of companies is kind of getting over and FY18 seems like closer to a normal year, I think that could really change the outlook for the market. So what we have said in a recent note is, yes, near term we expect the market to be range bound. And there are global and domestic factors which make the market volatile from a near term perspective.
Well, the markets clearly have found their feet for the moment, but I mean, today is going to be entirely ruled by the quadruple witching day, by the FNO expiry. At the moment, 7985 is holding, so it's a 0.6 cut. We have not quite made to 7,800, but just a hair's breadth reach to that number. It's, as Sonia pointed out, Bank Nifty that's reeling. Surendra, you know, this Trump victory and demonetization was timed to a nicety. Almost at the same hour, both struck us. Nevertheless, even if the DM-EM trade doesn't play out very badly and EMs are continued to be favored, will India move in the pecking order somewhere lower because of demonetization?
Near term, I think yes, okay, because no investor likes uncertainty, right? And definitely there is uncertainty from a demand perspective. And to that extent, near term, I think people are worried for the right reasons, because I don't think any of us really can say with a lot of comfort, yeah, this is the impact. Okay, and any form of uncertainty generally is a concern for investors. So to that extent, near term, yes. Does it change the medium term investor appetite for India? We don't think so at this point, but as I said, we'll really have to watch out for a lot of data, but I would believe that I don't think it really changes the medium term appetite for India.
Okay, well, one final question, Surendra. What are the moving parts you will watch? Like you said, and Samiran said before you, and all experts are telling us there are too many numbers we don't know in terms of how much money will not come back. So what are you watching? Will you watch out for the 26th December RBI monetary policy? Will you, I mean, the number of notes that don't come back on December 31st, the fiscal, the budget on Feb 1st? What are you going to watch before you make up your mind on your India position and your Sensex level?
Yeah. So, Lata, I think you answered the question in part. I think a lot, so obviously the RBI policy, the budget, I would really add the quarterly results to the mix, because I think people really want to hear from companies on what the impact has been and what they expect the impact going forward. If companies come and tell us that, yes, this quarter was tough, but yeah, next quarter looks like we are getting back to normal, I think that will give people a lot of comfort. So the point I'm trying to make here is that our medium-term view, which is reflected in our Sensex target, is still constructive. But yes, near-term, there are a lot of these things. And because of that, we really need to see over the next 3 months as some of the things that you spoke about and the quarterly earnings and trends play out.
Okay. Thank you very much, Surendra Goyal, for joining us.
Thank you.
That's the key takeaway. Some people